What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 17th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a jam-packed episode where we're not only going to be covering Bitcoin's price action and taking a broad analysis of the ETF inflows to really recap whether or not the ETF is even a big deal. We're going to give an honest and candid opinion on the actual numbers in the video today, and along with that as well, we're going to be analyzing a whole range of different altcoins that you guys have requested me to break down here on the channel, and beyond that as well, talk a little bit about the macro as well. I hope you guys are having a fantastic day wherever you are, and if you enjoyed this video, consider dropping a like, and if you haven't recognized it already, we're in the new studio for DataDash. This is the big surprise I've been leading you guys up to. I hope you guys enjoy it. I'll continue improving both the sound and the lighting as time passes. It's a work in progress, but I hope you guys enjoyed as much as I do, and let's go ahead and kick things off. So I want to start here by talking about Bitcoin and the ETF. Again, on price action, nothing has changed here since we last spoke. We're still struggling at that 21-day. This has been the first indicative sign here alongside a lot of the momentum indicators we track that is signaling that Bitcoin is ready for a cool down, that we are getting a kind of buy the hype, sell the news event here post-ETF. Nonetheless, it doesn't mean that I'm saying Bitcoin's going to new lows or it's absolutely in a bear market. I'm just saying right now, we're seeing clear trend weakness here in regards to price. So if this continues here, if we can't get above that 21-day, that's your sign that you're likely coming down to the 100-day pocket or the 200-day pocket over the next couple of weeks going into Q1 of 2024. Now, I want to go ahead and talk about something. I want to give credit where it's due. CC15 Capital on Twitter has been doing God's work here and tracking all of the public records for the assets under management or holdings of a lot of the Bitcoin ETF products that have launched from a variety of providers like the BlackRock iShares Bitcoin ETF, the Fidelity, Bitwise, ARK, VanEck, Invesco, Franklin, Valkyrie, Wisdom Tree ETP products that have recently launched. And I want to go ahead and spend some time to kind of dive into this chart and try to make sense of it all. Now, there's a lot of data here, or a lot of different points. I just want to let you guys know what the chart is. It's listing on all the ETFs, their fees, their ticker symbols, the number of Bitcoin total between all of these. This also includes GBTC, a very important point we're going to get to in a moment. But as we can see here, every single day, that number has been generally growing across the board in these various ETP products. So this is, again, very exciting to be able to finally track this information, and this is what really matters here. A big important point of nuance here as we dive into this topic is a lot of people believe that trading volume is what matters, and that's not true. It can be further from the truth. You can have $10 billion of trading volume. It could be on around $500 million of actual capital. So my point here is that at the end of the day, we don't care about the first day. There was $4 billion of trading volume on the Bitcoin ETF products. It must be big. That's not $4 billion of inflows. What we need to see is how much actual Bitcoin is stored within these spot Bitcoin ETFs, how much actual direct inflows are there. And if we're not seeing those inflows, we start to see outflows or even a slowdown in those inflows, that could be a really big warning sign that the demand may not be there. So let's start off with the basics here. How much Bitcoin in the first few trading days here, right? The ETP product launched here, I think on markets back on the 10th here about a week ago, I think it was back on the 10th exactly. So we can see here some of those ETF products starting to load up Bitcoin. We had a 1-day delay here for the Invesco one, but generally speaking, we have all the data here for the 16th. This was yesterday's trading day, and we essentially have net minus Grayscale, right, which has been around for a long time. This is the ETP, or more specifically the exchange traded note that's been around for years, which we've talked a lot about here on this channel. Minus GBTC, we have around 35,761 Bitcoin stored in these various ETF products, or around $1.5 billion. Now, I gotta say, that's not bad out the gate. And I know you guys are probably expecting me to bash on it and say it's a terrible number, this and that. It was way below expectations. Guys, I'll put it this way. We have been candid in saying that if you believe that day one there's going to be $10 billion in inflows or hundreds of billions of dollars in the first year, and it's just going to be this killer product, you're probably looking too far out. You're probably looking in too much of an optimistic lens here and falling in love with your investment. And I just say that at the end of the day, like if that was the anticipation, that was a very unlikely scenario. And we called that out as saying that it was unlikely to actually play out. However, what we have cited, if you guys remember back when we did all of our ETF videos, there was a really great research piece by Charles Yu from Galaxy Digital's research arm, and they put out, I think, a very realistic figure here for the total inflows on year one, which could be around $14.4 billion. Again, not a negligible number and definitely beneficial for Bitcoin. The question we talked about a while ago, and we're going to continue to focus on, is whether or not that plus the halving of it is going to be enough to continue driving prices higher for a new bull market versus the increased selling demand and pressure that comes with higher prices. We've seen Bitcoin make a 130% move here throughout 2023 and to 2024. So the question is, can we really keep up that momentum? And the ETF inflows here is the number you want to track. We're going to continue to cover this here on this channel, but I want to bring up a very important point here. 1.5 billion, it sounds like a very big number, but when we compare it to what's already stored in the GBTC ETN product that's been around for a couple years, you're talking about $26 billion that's already stored there. And all of the new ETFs only garnering around 1.5 billion. Now, I will be fair in saying here that 4 days is different than multiple years, which is what GBTC has had as a kind of front runner before the ETF. I'll get that out the gate. But I want to make it clear here that this is probably far and few away from what a lot of bulls were estimating. A lot of people were probably expecting this to hit $3 or $5 billion in the first week in regards to real inflows. And that's an important thing to keep in mind here, because if we start to see the stagnation in the trend, we saw, for example, from the 12th of January to the 16th, only an expansion of 1,200 Bitcoin, not even, from those two trading days. Those big leaps and bounds we saw from like 18,000 to 34,000, or from 2,600 to 18,000, they may not be continuing to play out each and every trading day. And that could be a sign here that there's not the kind of demand that people want in an ETF. I'm not saying that's the case here yet. We're working with 4 days of real tradable data here for the ETF products. I want to get more data on this. We're going to continue watching it every week here. But if this trend doesn't get you to a point where by, say, the end of January, we're looking at least 100,000 Bitcoin stored in these ETF products, the narrative that this ETF is going to be some huge flagship product is probably not true. And it's something that we need to adapt to when it comes to our market analysis. I think it's a big reason why Bitcoin is hanging below its 21-day. Bitcoin's had a great run up here since 2023 and going in here to January 2024. But with the ETF now out of the way, unless it's a big deal when it comes to actual spot demand for Bitcoin, then prices will likely fade. Even with the upcoming halving event. This was the big narrative people were excited about, not the halving event, which has a waning effect or a decaying effect over time on Bitcoin's price. Because if you just want to understand why that is, let's just say in a hypothetical scenario, I have some asset I've created, and initially it's having a 50% inflation rate, but that drops to 25%. That is a technical halving in the inflation rate, but we reduce the inflation rate on an annual basis by 25 whole percentage points. Nowadays, when we're talking about the halving we have now, although the specific numbers are a bit detailed, I think it's around 1.4% on an annualized basis going to 0.7%. That's definitely going to be a positive for Bitcoin, but you're talking about less than a percentage point against the net supply that already exists. So the more important question here we've got to ask is, where is the market order flow going to come from? Is it going to be market order sell side pressure or market order buy side pressure that outweighs? Because yes, there's always a buyer and seller on each side of the trade. It's important to note. But the market order flow is what drives the trend direction. It's what clears through the bids on the order book to the upside or to the asks, to the downside. Excuse me, I apologize. Other way around. To the bids to the downside or to the ask to the upside. I know it sounds all fancy, but generally speaking, we need to track market order flow. Next up, I want to dive a little bit into the altcoin space. We'll continue to talk about the ETF in the next couple of weeks, but when it comes to the altcoin market right now, really analyzing everything separate from Ethereum here, we find a really interesting trend. We are no longer staying above the 21-day moving average. In fact, the 21-day pocket has started to widen, it's flatlined, and we are having this tango here over the last couple of days for the bulls and the bears to see who's going to take over the trend here as the trend has started to flatline. Watching what happens here, getting a solid daily close in either direction is what you are going to want to look for here, and to see, given a day or two beyond getting out of that pocket, that'll likely be your confirmation of where prices are going. If I had to give you guys my honest take here, as we've indicated over the past few weeks, the trend has been neutral here for coming up on a month. And because of that, that to me is giving me a good sign that we've got a good chance to come down here towards some of these healthier moving averages, like the 100-day pocket, the 200-week moving average, and the 200-day. It's not too crazy to think, as these moving averages are moving higher, that by the time we actually get that new relative low, that it'd be somewhere right around where we were back here, around $400 billion, cutting back about half the gains from the expansion since October. Not a crazy call in that case, especially considering if Bitcoin is going to be declining due to less actual results from this ETF when it comes to the inflows that people were priorly expecting and pricing in. I want to talk a little bit about some of the broader measurements for the altcoin space. We'll talk about the EXBS index. This has been mainly held up here due to Ethereum in anticipation of a potential Ethereum ETF. BlackRock or Larry Fink more particularly made some very bullish statements that Ethereum could serve as the base for tokenizing all assets. That's a very far-fetched claim, but at the end of the day, the narrative is there, right? Irrespective of whether or not we think that that's true or not. And I say that as someone who was bullish on Ethereum back in 2019, I don't see it being the platform for tokenizing all assets, even with roll-ups. But putting that aside here, the market's chasing it. It's above the 21-day. And until it really snaps the 21-day and, perhaps even breaks the Lux Algo indicator here, I think the bulls have got control right now when it comes to these larger cap plays, especially Ethereum, which is holding the majority. When we dive into the individual plays, it becomes clear. Ethereum is well extended above the 21-day here. I would expect it to probably cool down, come and retest the $2,400 range here, as that's where the 21-day is. That was where resistance was. You get a bounce off there, possibly, if the bulls continue to control it. But the other players are looking a lot weaker here. We see Solana, for example, barely just kind of holding in here with the Lux Algo support band, but in the 21-day is now acting as clear resistance. It's the point where people are distributing and selling positions. Not a good thing to see. So while these two indicators play tango here, if we break below the Lux Algo support band at around 83, you're coming down at a minimum, I think, to the 100-day, and much more likely coming down to the 200-day, which is still expanding. It'll probably bring you an opportunity to get sold at around 50 to 60 bucks here. Outside of that, we've got BNB. While BNB has had a nice surge from 200 to 330 here, over the past couple months following the optimism around Bitcoin. On the long-term chart, while the Lux Algo indicator has flipped green here, I'm continuing to watch that. We need to see it show up to the plate here, clearing through its prior long-term line of support that may very well be acting as resistance. It did so back here in November 2 times, and it also has been doing it so far here in January. If we can't get above there, that is a big warning sign for further price action to come. Outside of this as well, we've got XRP, which again, while it has been on a slight uptrend since June of 2022 in dollar terms, has massively lagged behind Bitcoin, and on the long-term trend on the weekly is still not getting above its Lux Algo resistance band here. Until we really get some kind of snap up above there, until we get a green flip, I'm not interested in any kind of trade on XRP. XRP is a momentum play, and unless you're trading it when there's that momentum, you're likely holding a deadweight position that just continues to distribute and go down. This play is massively manipulated by market makers. If you guys don't understand the game, if you don't know the history of GSR and a lot of the market makers that built up XRP, well, you definitely should not be trading it. Trade it when there is that momentum. Trade it when there's retail liquidity coming in. Next up, I want to talk a little bit about meme coins. This has been one of our big focal points as well. We've talked a lot about Bitcoin-related infrastructure, but I want to focus in on some of these meme coins. Again, we see that on the Lux Algo indicator here, the trend flipped red back in early January, and it looks very much like we're struggling at the 21-day. We had a break at above there, we had a fade, and for the last couple days, we've actually closed below that 21-day. Inability to actually break off of there, and therefore it looks like we're going towards the 200-day pocket or 100-day pocket. I think at this point here, with the 200-day pocket being aligned here with the prior opening here for the Bybit listing, which is one of the early major exchange listings, right here around 0.00005. I hope I got that right with the amount of decimal spots. But simply put, this is where we're looking for potentially getting an entry here. Outside of that as well, there is Bob. This is a ETH-related ERC20 token meme coin. I think, again, you've got a chance here to come here towards this significant support range of the past, start consolidating with that within that 100-day pocket, and then eventually breaking out here and really giving us a great trade opportunity. As that 21-day comes down, I look for support in that range, a break above the 21-day, which will likely be lower, and if we get a nice solid daily close above there, that's your ticket for this thing to really continue moving higher. And Bob is a much smaller market cap play here, so it interests me a bit more than trading on Bonk, especially for like a multi-month trade. If you guys are interested in utilizing some of the indicators we've been showcasing here in today's video, and we usually cover here on the channel, the multi-time frame moving average is something you guys can get access to on TradingView, where you guys can access these kind of moving averages. You just got to get everything set up the way you want. But if you guys are interested in utilizing the Lux Algo indicator that we utilize, the signals and overlays indicator, one of many that come with being subscribed to Lux Algo, you guys can check out the link down below in the description. You can use my link down below and have a 30-day risk-free guarantee. It doesn't matter if you sign up for the monthly, quarterly, or annual. You guys can give it a try. And there's a ton of other indicators like the price overlay and a whole range of other tools that you can utilize in your trading arsenal that can help you guys with your analysis. So definitely consider that as you go throughout your trading and continue watching the content here on the channel. Last but not least, I want to talk here a little bit again about equities here. For the last month, we've had relatively neutral price action here, no real expansion in the S&P 500, and I've got it here in the monthly because when we utilize the Lux Algo here, this has been really good at spotting, kind of long-term trends here, right? The big thing I've emphasized, I know a lot of people feel like if they didn't buy in 2023 that they missed out big time on trading in stocks or trading in crypto. The point I brought up here constantly is that we don't care about missing one good year or missing a certain trade opportunity. What we care about is whether or not we're going to be able to maintain a decade-long expansion like we saw during the past 10 years where liquidity was on our side, the Fed was constantly doing rounds of quantitative easing, and we had easy money on our side, so we didn't have to be a genius. We were able to just make solid money, outpacing inflation, outpacing money debasement, and with that, the velocity of performance and assets are on our side in the trend. And if we don't have that easy money coming and we can't get above these resistance bands like we've seen in the past, then this is going to be your indicative sign that prices will likely be moving lower and probably will stagnate sideways for a while or potentially really have a significant correction going into a recession. My main point here is that we're looking very overextended here. It doesn't matter if you look at the S&P 500 in nominal terms. You can divide it as well, for example, by the M2SL money stock. We can turn off our indicators here. And just take a look here. This is one of the most extended levels we've seen, the S&P 500 against the money supply since back in 2001, well beyond 2007 here, or any other periods here like November of 2021, here in January 2020, or back in 2017, 2018. It is not an environment, I believe, where you're going to want to be taking excessive risk into these plays unless you can clear through some of those indicators and showcase that we're going for another bananas moment in asset prices. So for me, I'm remaining cautious. I'm definitely looking in the near term for some awesome setups in crypto. There's confidence in the trend, even though we might have some pullback. There could be some really great risk-reward opportunities. But for now here, we're remaining vigilant. We're watching the S&P 500. We're watching the VIX here that looks like it's curling up here. And as it surpasses some of these moving averages, you got to keep an eye out for whether or not volatility is going to spike. There's a lot of different things we're going to be watching here, guys, in the markets. I think the biggest thing is the ETF inflows. This is going to be your risk sentiment gauge, not just for Bitcoin, but for the broader performance of assets. We'll continue to track this here. I'll try to do it every Monday or Friday. We'll try to give it a routine of just kind of tracking it for the next couple of weeks, seeing what happens, because this is the period of time where the bulls have got to show up. This is the period of time where the ETF has to really grab people's attention, because if it doesn't, this price that rose off of those anticipations for the past year can easily come crumbling down here over the next few weeks and months. The market can give, and the market can take. So that's it for today's video, guys. I hope you all enjoyed it. If you did, consider dropping a like. Sorry for some of the drilling sounds as well in the background. I don't know if you guys heard that, but hopefully that's a temporary thing. Basically the place I moved into, there must be some construction going on. But if you guys enjoyed this video, consider dropping a like. If you also want to utilize Lux Algo in your analysis, you can use my link down below. I have a 30-day risk-free guarantee to try it out. Hopefully it'll help you guys in your trading strategies. You can use it across crypto markets and equities. I prefer using it on the daily, weekly, and monthly time frame. I don't use it on short-term time frames as I don't day trade. So you guys can really use it how you want. Figure out how that works valuable for you. But until the next video, I'll see you guys right back here on Friday at 6 a.m. Eastern Standard Time. Take care, everyone. I'll see you guys in the next video.